Liebe YouTube-Freunde, das heutige Video, bitte schaut euch es an. Bitte teilt es. Denn es geht nicht nur, aber es geht im Wesentlichen auch darum, soll ich investiv leer verkaufen gerade? Soll ich auf die fallenden Kurse der nächsten Jahre setzen? Wo ist Wert zu holen? Wie muss ich mein Portfolio aufstellen? Es gibt konkrete Hinweise, was abläuft, wo sogenannte Pockets of Wealth sind. Aber es geht um mehr. Es geht um die Kernerfolgskriterien. Es geht um Beharrlichkeit. Aufstehen, wenn ihr in die Fresse bekommen habt. Ja, es geht auch um Glauben. Und überraschende Antworten. Es ist ein einzigartiges Interview mit Jim Rogers. Ich maße mir das jetzt mal an. Einfach zwei Investmentlegenden sprechen über Investieren und das Leben und den Sinn. Also, schaut es euch an. Ich garantiere es. Es wird sich lohnen. Viel Spaß, euer Florian und legt los.
Dear YouTube friends, today it's an enormous privilege and joy for me to talk with Jim Rogers once again. It's been over 3 years. And this interview will be different than most that I've seen, virtually all I've seen so far on YouTube, because Jim, as a man, as a person, as a human being, is just as interesting as an investor. So there's something for everybody today. It's not just the long, short, total return knuckleheads. What's my portfolio going to do next month, Jim? I got to start with something which really triggers me, and then we'll get into financial issues, asset protection issues. Clearly, Demopolis, Alabama, 7,000 people. How on earth do you end up in one of the top Ivy League universities?
It was only 6,000. Well, it was really sort of an accident. I didn't know what I was getting in for. I applied for, because a club I was in, a boys' club I was in, that Yale gave a scholarship. I was really applying for the scholarship. I didn't know much about Yale. And lo and behold, I got the scholarship. So I had to go.
Wow.
I was in, Florian, I was in over my head. I was not prepared, but I couldn't go back. So I had to work very, very, very hard to survive. And I did.
Well, working hard seems to be a thing. If I go into your life records, I was impressed that you're a marathon runner. Tell me something about, did you row at Yale?
That was the Cox. When I got to Yale, some big guys came over to me one day and said, "We need a little guy. Come with us." So they took me down to the river and put me in the boat and said, "Okay, now you're in charge." I didn't know what I was doing, but it was either sink or swim. So I had to do it.
Well, you won at Henley, which is kind of the European #1 race. Let me ask you another question about your philosophy, psychology. I understand you were in the military as well.
Yes, I was in the United States Army for a couple of years. Back in those days, most people, nearly everybody had to go. So I did. I did what I was told.
Wow. Now your fields of study were history, and later on, I guess, in England, it was philosophy, politics, and religion, economics. What on earth got you to this carnivorous world of Wall Street? That's quite a transition.
When I was in university, I was going to go to law school, medical school, business school. I was as confused as everybody else. I had no clue, but I happened to get a summer job on Wall Street. Now, I knew nothing about Wall Street, Florian. I knew it was in New York. I knew something bad happened in 1929, but I didn't know the difference in stocks and bonds. I thought they were the same thing, but I fell in love. I fell in love because they would pay me to do to keep up with the world and what was happening in the world. And if I did it right, they would pay me a lot. It was fabulous. So I didn't go to law school. I didn't go to business school. I didn't go to medical school. I went to Wall Street as soon as I could.
That's hilarious. And then at the age of 37, I did that at the age of 40, actually, quite interesting. you retired and you stayed pretty much, you're in Wall Street, but you're not inside the clubs. You're outside. At age 37, you said, basta. What made you do that?
I had always used to say, and look, I didn't know what I was talking about, but I used to say that I wanted to have more than one life. I didn't want to be 85 years old and still sitting in front of a computer. And so I retired so that I could seek adventure. I wanted to go around the world on a motorcycle. I mean, I don't know why I said that, but I really wanted. I love motorcycles. I wanted to see the world, wanted adventure. So I did it. I retired and set off to do it.
It's very refreshing. I think it's a wonderful thing. And I wish I would have stayed out of the market at age 40, but I had to do it another basically decade almost, driving myself nuts in the process, by the way. But your defining period as an investor is relevant for all. Now we're going to go into markets a little bit, Jim. Is a defining period. Your success at the Quantum Fund and other investments was based on a stagflationary period, where real losses in the stock market were roughly 75% between 66 and 82. So you learned the trade earlier, or how could you be so nimble? Because most investors lost fortunes.
Well, Florian, we just loved what we were doing. There were two of us, and both of us happened to love it. As I said before, they would pay me to do what I loved, and I never thought I had a job. I was just having fun. I'd get up every day and go and have fun. And I used to remember, I wish they didn't close the market on weekends. This is too much fun. So I spent many hours, both of us did, working at it, and we loved it, and we used a lot of leverage. We borrowed a lot of money, and we got most things right. So it was successful.
Jim, when you borrowed money those days, could not have been too surprising to pay 15, 17% interest on your margin loans, right?
Yes. Interest rates were extremely high in those days.
And how did you deal with the pressure of such high carry costs, which are zero these days? It's laughable.
Florian, I know it sounds crazy, but we never felt much pressure. That's partly because we did a lot. I did a lot of homework. We did a lot of homework, and we thought we were right. And many times we were right. When you get it right, there's not that much pressure.
I'm with you. It helped me become a billionaire as well, and I had the same passion. Okay, it's when you're nuts about the job, then it's not a job. The thing, obviously, which I'd like to ask as a former hedge fund manager, how did you manage the risks? Because leveraged, concentrated bets. How did you handle risk, large currency exposure, commodity?
Well, again, we never thought we were taking risk. We didn't do something unless we thought it was right, and we had a lot of leverage, yes. And obviously, when things went against you, you got a margin call. But most of the time, I sort of hate to say this now, but most of the time we were right. The risk was that the leverage would go against us, and it sometimes did, but not very often, and not by much.
Okay, when it did, though, did you ever pull the string to say, basta, enough, this trade is going to eat my portfolio? I'm not properly diversified.
We didn't have any choice. When the margin clerk calls, you got to cut back something. And so we would always cut back whatever was easiest to cut back.
Now let's...
Florian, you cannot say to the margin clerk, oh, don't you understand this is a good investment? Margin clerk didn't know and didn't care. He would say, I'm sorry, Mr. Rogers. I don't know about that. I just know you got to have more money.
So they kind of did
we didn't have any choice. It was
exactly did the risk management for you, and there were no bailouts for idiots who invested in funds like the Fed at the time, right?
No bailouts, no such thing.
You actually had to earn your money. Let's go into this period a little bit, because I'll do the introduction and the question. there are 5 scenarios basically, and your defining period was stagflation, but I didn't buy the all is well modern monetary theory bullshit at all. I've published on this extensively. I think we have 4 other options: stagflation, systemic crash, something goes really wrong, inflation, or Japanese sclerosis. And we're right now, I would like to call it, in a dash for trash market. I mean, stuff goes ballistic. I kind of like the idea of Bitcoin, but that goes ballistic. The recent short squeeze, it reminds me of the .com situation where companies are valued on on page impressions, not revenue. You got battery companies with no revenue. Tesla looks like a hedge fund to me, not like a automobile manufacturer speculating in Bitcoin with its cash. So it's fine. It's bloody nuts. And collective insanity is explained by fake and low interest rates. Is this feverish stuff, Jim? Are we a high fever pitch in the markets, which is a fantastic sign for sell-off?
Well, Florian, this is not my first rodeo. I've seen this movie before. We're not in some bubbles. Bonds are in a bubble. Bonds have never been this expensive in the history of the world. Property in some places, Seoul and some other cities, is in a bubble. Stocks are beginning to form a bubble, but not everything. I mean, there are lots of stocks that are still down, but some stocks are beginning to form a bubble. You see the same signs that we've always seen. A lot of new people are coming in the market. They talk about how easy it is. You know, they're all buying and telling their friends to get into the market. These things, these blind investment trusts. This has all happened before. I don't think we're at the end of the bubble yet, but it's happening. I say, I've seen this movie. I know how it ends.
Well, it's kind of strange that I started investing in mid-70s and very early at age 15. And I made a good part of my fortune shorting markets, net short, very net short. And I'll go into specific investments a bit later. But first, I'd like to ask you something else, because I'd love to touch on one of your books where you traveled with your wife and your geopolitical assessment. And I'm just going to ask you a few questions, if that's all right. And let's start with a real cliffhanger. Renminbi versus US dollar. Is the renminbi the next world reserve currency?
Well, Florian, you know as well as, I guess you know that I guess your viewers know that the United States is now the largest debtor nation in the history of the world. Every nation in history that's gotten itself into this situation has wound up having a crisis or a semi-crisis eventually. As I look around, and history shows that no international currency has lasted more than 100, 150 years. So the U.S. is coming to the end, not this month, not this year, but we can see the end coming. As I look around, the only currency I can see which can compete with the dollar at the moment is perhaps the renminbi. It's a huge economy. They don't have a lot of debt like many countries do, like Japan or Britain. So if you ask me, yes, I own a lot of U.S. dollars. I own some renminbi. I don't see anything else that will compete with a dollar.
Wonderful. We're sort of in the same camp. We're pretty chilled out about it also, because the relative position of strength is definitely disintegrating in Europe and in North America, and Asia is popping. It's a blind man can see that. Let me ask you a little bit about the sclerosis situation. When what you've written about Japan in many ways reminds me of Germany, a declining nation with terrible birth rates, way too much regulation. What are the odds that you see sclerosis rather than the other scenarios, stagflation, crash, inflation in Europe? How do you feel about sclerosis? Japan becomes Europe.
Well, the Japanese do have a serious problem. The population has been declining since 2010, and it's not going to start rising because they don't have babies and they don't like foreigners, so there's virtually no immigration, and the debt is going through the roof. It's astonishing how much debt they have. So the Japanese have a big problem going down the road. But America is the largest debtor nation in the history of the world, and our debts are getting higher and higher every day. We do have some immigration, whether it's legal or not. Germany has the same thing. I mean, you don't have as much debt as we do, as America does, but you do have immigration, whether it's legal or not. You do have immigration. You need it. Mrs. Merkel knows you have to do something. And in your case, you're not going to be as bad as Japan. You have debt, but nothing like Japan, and you don't have the demographic problem that they do. So I hope.
Sorry, Jim, as you mentioned, demographics, the average age in Japan is 55, but the average age in Germany is 46. We're topped by Italy in Europe. That's a big factor in your investing philosophy, as far as I can tell, in country selection.
Well, you have to know what's happening. Listen, I own shares in Japan right now for a variety of reasons, but at least I think I know what's going on, and so I will be prepared and can judge accordingly. When you invest in Florida, I mean, you know better than I do, you have to know as much as you can in order to be successful, because otherwise you'll get blindsided. Something will happen and you won't know what happened.
Do you view your Japanese long positions as good value in spite of potential risk of the yen collapsing? Are you hedging your yen exposure?
No, I'm not. And the reason I'm not is because, well, the main reason I'm long Japan is because the head of the Bank of Japan goes to work every day, prints as much money as he can, in his words, unlimited, that's his word, unlimited amounts of money, and he puts it into stocks, bonds, and ETFs. Florian, he has more money than I do. If he's going to buy ETFs, I'm going to buy ETFs. So I own Japanese ETFs. I have not hedged the currency because many people think the Japanese yen is a reasonably sound currency. And so I don't see any reason yet to hedge the Japanese currency.
China, Russia, we're still in geopolitics. Extremely interesting. The impressions you had when you traveled with your wife, Paige, there. Now, if you page forward in 2020, has Russia become more dynamic, or is it still the royal mess you described in your travel book?
Well, I went to Russia a long time ago, and I came away saying this will never work, all of East Central Europe. But then 3 or 4 or 5 years ago, I decided I think I saw something changing in the Kremlin. A mentality was changing. They began to welcome investment. They began to welcome entrepreneurs. So I started investing in Russia. It was very cheap. It didn't have huge amounts of debt like many other countries in the world. And if the change was there and if the assets were going to be used properly, I began investing in Russia for the first time in decades. The only other time I'd ever invested in Russia, I had been short the ruble. But here I went long, and I still have investments in Russia.
You touch on transport shipping. I did that at Fidelity for several years, shipping. Do you do this via an ETF, or do you go stock specific? And why transportation so much?
In the case of Russia, I mainly own individual stocks. I do own one ETF because I'm lazy and it's easy. But there there have been some disasters everywhere, but especially in Russia. So I found a Russian shipping company, which was a disaster. I have learned throughout my life that if you find disasters that are going to change where things are getting better, you might make a lot of money.
Can you talk about the name, or do we have to figure it out?
No, I'm not going to tell you the name because I'm still buying.
I wouldn't tell you either then. I love it. What I find as a German citizen and a European really utterly stupid is that instead of an approachment to Russia, which makes historical sense and geographic sense, what has changed since your trip, and we have had an analyst in China for several years, is that the border area, China and Russia, is flourishing like no other place in the world. We're pushing Russia to China. What are your thoughts on that?
No, the American government, I'll use them since I happen to be an American, pushing Russia and China together. Every time America turns around, they put sanctions on somebody, but especially the Chinese and the Russians.
So the Russians. It's Navalny, our European Union. Sorry to interrupt. Europe did this.
I'm talking about, you can talk about Europe. I'll talk about America first. America's pushing Russia and China together because America puts sanctions on both. The Russians and the Chinese are right there together. The Russians have a lot of natural resources and space, and the Chinese have a lot of people. Yes, I've been to that border a couple of times. It's booming. Absolutely. The cross-border traffic and trade is astonishing, and it should be, and it is. Unfortunately, from my point of view, America's making it worse, pushing them together.
It's strange. I mean, to me, it's a bit historically harebrained, but let me touch on another market which you described, an important market, but I would like to ask you about your views on Korea, but we're very fond of Vietnam. We're not sure about Myanmar, Burma, formerly Laos and Cambodia. We're not so sure about Indonesia, but do you have a preference in Southeast Asia? Because you mentioned that area also.
Well, I do have shares in ETFs in Indonesia and Vietnam because, again, ETFs are easy and I'm lazy. The more experience I have, the lazier I get. I would like to invest in Myanmar. Myanmar has supposedly made it legal for foreigners to open accounts there, but they make it very difficult. You have to go. You have to have you can open an account, but you have to go there. But then also you have to have a bank account and you have to go there. So while they say we want foreign investors, they don't make it easy to do it. So I don't have any investments in me. I would love to right now, but there's chaos in Myanmar right now. And I know that investing in chaos often, not always, often leads to great opportunities.
Yeah, on Myanmar, it reminds me of a passage in your book where you describe the Chinese stock exchange peddling physical shares. It was no different in Turkey. I ran an emerging Europe fund. There was more action going out on the pavement before the Istanbul Stock Exchange than inside. It was hilarious. I had stacks like this of cash. I mean, suitcases to buy into companies physical.
Florian, one of the great joys of talking to you is you've done a lot of this. You've been there. You know how it works. You experienced it yourself. Yes, I've seen that often.
No, it smells. It smells good. Myanmar smells really good. I'm picking up your idea on Indonesia in ETF really nicely. Let me ask you something which touches me a lot, having listened to your interviews professionally. You make a distinct separation between trading versus investing. And I sense that you're much more of an investor than a trader, but could you give me a sense of how that divvies up?
Well, Florian, I'm not a very good short-term trader. Everybody has to learn their own way. I have known some spectacular short-term traders who could buy and sell an hour, a day, a week, or something. I am not any good at it. My market timing is horrible. I get carried away. I don't know why it's so bad, but it's always bad. So I have learned that the best way for me is to find something cheap where there's a positive change taking place and then buy it. And if you're right, you can own it for years. And if you're lazy, like I am, it's much, much easier. Most of the time you're going to have to sell it someday, but someday might be years away if you do it right.
It's less stressful. I'm with you. I don't like looking at the screen like a screen monkey. You mentioned Neuberger legend. It's not my cup of tea. But let me ask you this on the short side, obviously. You said the long side is cheap with positive change. That's got to mean, Jim, that the short side's got to be expensive with negative change. Will you short valuations only? High valuation?
No, you cannot just, you have, if you find something where there's hysteria, where people are going crazy, first of all, the signs are always the same. I mean, all bubbles look the same throughout history, no matter what the asset. But just because there's a bubble doesn't mean you should short it. My way has been to find something where I think a negative change was taking place, and that therefore you could short something that was too expensive. But Florian, shorting something that's too expensive is not you. It can get more expensive. I promise you, it can get more expensive.
Jim,
but if you can find something where something is beginning to go wrong before people realize it, then you might have a success.
Let me ask you this, just a curious question, having been sort of called the apostle of doom as a short seller in Europe. Have you been significantly net short in your active time between 66 and 80, I'd say? Where you're the wealthy manager, did you ever go into a very aggressive net short position?
Well, in those days, yes, there were times when we were very net short, very, very short. One of my great successes early was I put a lot of money, all my money, into puts. And within 5 months, I had tripled my money when everybody else was going broke. But then I got cocky. I said, this is so easy. I'm going to be very, very rich very quickly. I waited for the market to rally. I sold short with everything I had. And Florian, 2 months later, I was wiped out. And I was completely broke. Completely broke. But it's a good lesson. I thought I was smart. There was a lot I didn't know, which the market taught me very, very quickly. Boy, you're not so smart. Let me show you. So the market wiped me out. It was not fun. I know I remember it badly, but at least, and I tell, especially when I speak to students, I tell them mistakes are fine, especially if you learn from them, but make your mistakes when you're 28, not when you're 58. Make your mistakes young.
I have a few disasters to talk about too. Anybody claims that they woke up and became successful in this space are delusional or liars. Okay,
they're probably going to be in trouble if that's the way they are.
Or their customers. Let me talk briefly about the topic of asset protection. You under Carter and before you witnessed insane tax rates. Insanely high interest rates. It's the scenarios we're considering always involve financial repression, capital controls. U.S. citizen, you're globally taxed, which is harsh, really tough stuff. I think that might become popular in Europe. What a mess. Do you expect in your economic outlook severe financial repression, privatization, zombification?
Well, history is pretty clear that when countries get in trouble, they blame it on their citizens. They never say it's my fault, and then they start putting in extra controls and extra taxes for your own good. This is for your own good. We're trying to help you and trying to help the country. It's very clear. It's happened many, many times in history. And it always happens when countries get into trouble. And the U.S. is heading towards trouble. If history is any guide, we're the largest debtor nation in the history of the world, printing staggering amounts of money, overextended militarily in many places. I mean, this, again, I've seen this movie. You know, if you read history, you know what's happening. Now, in Washington, at least Mr. Trump, either, I don't know if he knew history, he said he did, but he doesn't care. He thinks he's smarter than history, and he thinks he can do what he wants because he's smarter than history. I mean, he's gone, but, you know, that's mainly the way people think in Washington and other countries.
Well, let me touch on the last geopolitical question, Jim. Biden put forth the 9 industry plans, which he's going to support. It reads totally like the Chinese 5-year plan, which expires 2025, looks a lot like the Chinese 2049, the 50-year plan, 100-year plan, I should say. I think the Americans are not as good at doing this. We have similar idiocies in Europe. We're not capable of executing that. We don't have the discipline. We don't work nearly as hard. Are we entering a whole new wave of delusion, trying to imitate China with far less drive?
Well, I don't know. You say, are we trying to imitate China? I don't think that, certainly not in the West. I don't see many countries where they're disciplining their children, educating their children the same way. I live in Asia now, and my children go to local government schools. They don't go to Western schools. And the amount of work, the homework, and the advanced levels and the demands are incredible. I mean, I remember when I went to school, my kids have had more homework in 1 year than I had in 12 years in the U.S. And I mean, fortunately, my children are thriving, or I'd pull them out. But it's astonishing. This is for everybody. This is every day. And this is the way most Asian schools and education is now. America became very successful, but we had an unbelievably good education system once upon a time,
yeah.
which we don't anymore.
Whoa. Last question I have, this is partially from our team. You don't have to answer them if you're active, of course. Do you feel comfortable going short tech, real estate, bonds, and other areas at this point already, or you're net long?
I have virtually no shorts now. No, I'm not shorting anything because, as I say, these things, when they develop, go on much longer than anybody expects, and they go higher than anybody expects. So, and I still see a lot of stocks and investments that are down. I mean, as I look around the world, Florian, I told you about bubbles and things that are developing, but commodities are cheap on a historic basis. I mean, silver's down 45% from its all-time high. Sugar's down 70 or 80% from its all-time high. Amazon makes new highs every day. You know, Samsung goes up always. 10 cent never goes down. But, you know, sugar's not like that. Silver's not like that, not yet.
I mean, there's been a bloody war field where you can count the corpses of short sellers who try to make money on conviction and forget about momentum. Let's take a little bit to your commodity ETFs. This is a question from our analysts. We like them, obviously. They've done well. Better than peer indices like the Goldman Sachs Commodity Index. Now, how does your team handle rollover costs? Is there any science to this? Anything special?
No, the science is just play by have simple rules. And if we always have the nearest contract and roll over into the nearest contract. No, this is not designed to be any kind of management or any human brain power. This is designed to be a pure index so that if commodities go up, you will go up, and if commodities go down, you will lose money. But to do it in my way, to do it right, you have to have something simple. If you start trying to get smart or fancy, you're probably going to have problems.
If you look at the makeup of our long-short newsletter, investment letter, we're presently exposed by about 35% in commodities, of course, metals, and also emerging markets, Asia to a large extent. We'll probably move that towards 45-50% as if the relative value in those areas is spectacular relative to the US and Europe. How is your asset mix obviously on the long side, given that you're not very short much?
As I said, I have no shorts at the moment. I have shorted a few junk bonds, but not very much. I don't want to be trying to short at this stage. I'm waiting for something, and I don't know what. And it may not happen for a long time. Something that will make me pull the trigger to sell short. But no, I'm not shorting anything at the moment because there's nothing yet that I can see that's going to reverse the momentum. Governments everywhere are printing huge amounts of money. Yeah. And, they say it's to revive the economy. Well, it takes a long time to build a factory. Yeah. But Florian, it takes 8 seconds to put money into the markets. You turn on your computer and you can invest in, a few seconds. And that's what's happening. This money's got to go somewhere. And it's going into markets, so I'm not shorting yet.
Can I ask again in a more simpler way? Are you very exposed to commodities, emerging markets, and obviously precious metals? Would you say that's a big mainstay of your portfolio?
Florian, I don't have a committee, so I cannot tell you my portfolio, bro. I don't sit around every week saying, how much do I have here? I don't have to report to anybody. This is my own money, and if I lose it all, I don't have to tell anybody. If I make a fortune, I don't have to tell anybody. I know I have. If Russia's an emerging market, I'm there. China, I told you. Japan, I guess, is not an emerging market. I have these various and sundry things. I'm buying more more commodities now. Sure. I'm not buying silver and gold at the moment. To me, it looks like they're in a correction, but I will be buying more in silver and gold before it's over. I'll probably buy much more silver because silver is down 45% from its all-time high. Yeah. Gold is only down 10% from its all-time high. So I'll probably buy more silver. But if it reverses, I'll buy more gold.
Exactly. Wonderful. It's investing. It's not trading and hardcore speculation. Let me touch on something which I care about even more than net worth or investment returns. Surely. You have a correlation, obviously, between your travels and your awareness, values, and investment success. It seems to be a formula not practiced much anymore. Seeing the world.
Well, I don't know. Well, first, I grew up in a very small town in the backwoods, and I guess many people never leave when they grow up in a place like that, or they want to get out. Well, I wanted to see the world. I knew there was something out there, and for whatever reason, from an early age, I wanted to see the world. I wanted adventure, and that was my plan. Now, if I have a lot of diamonds, I might lose them or somebody might steal them. But if I go around the world a couple of times, nobody can ever take that away from me. It's experiences, and it might be expensive, or you can do it without spending a lot of money. But that to me is the best way for me to spend my money and my time. Everybody has to do it their own way. I know people who have 4 or 5 houses, have many cars, girlfriends, boyfriends, whatever. I didn't care about any of that. I just wanted to have adventure and see the world.
Let me ask you this. Your first trip on a motorcycle was by yourself. I did much of that myself. All my travels were very much by myself. The second trip was with your wife-to-be. How did it feel traveling by yourself? The returns on that, the value of being a lonely traveler of sorts, and with your future wife?
Well, I have had several trips in my life. I've traveled with other females before. I didn't marry them. I did marry on the last trip. My then fiance, now my wife, and I spent 3 years going around the world. We got married on the trip. And Florian, we're still married. You know, we've been married 20 years. And I will say to you, if you want to find out if you can live with somebody, get in the car and drive from Frankfurt to Moscow. You will know before you get to Warsaw. You'll know. I know people who couldn't drive from Frankfurt to Berlin without getting into a fight. If you want to test a relationship, get in the car and drive together.
I think at Frankfurt, Novosibirsk is an even better test. Let me touch on one last thing, which I think is kind of interesting, and I haven't seen people ask you this. Your value system is definitely based on issues like work ethic, learning, productivity, savings, and investment. And it's a wonderful summary for all our young viewers. And then, of course, it's well documented that you were raised in your family of Episcopalians. That's faith, because you've had many challenges in your life. 2 divorces, not easy, rough markets, high juice. Does faith enter your formula?
Well, yes, I was reared as a devout, strict Christian. I am not much for religion anymore. I've seen a lot of life and a lot of religions. Oh my gosh, you must see a lot. You know, traveling around the world, you see a lot. And I am not very religious anymore. I'm trying to teach my daughters to be self-reliant, to be independent. I'm trying if I can teach them one word, it's persevere. We know a lot of intelligent people who are not successful. We know a lot of educated people who are not successful. We know a lot of talented people who are not successful. We know a lot of beautiful people who are not. The people who are successful, Florian, are the people who never give up. Those crazy people who just keep trying, independent thinking, asking questions, and never give up. And I have learned that is more important for me and for many people. And that's what I'm trying to teach my children.
Jim, on that note, having been way up in the world and way down, never giving up is not a choice. It's my genetics and yours, obviously. And on the other hand, I'm not a fan either of religions. They cause a lot of turmoil. But what I want to ask, not a religious question, formal religious practices, is there an element of faith, perhaps, when we both leave this place?
When I leave this place, where am I going? Florian, I don't know. I don't have the answer. I can tell you that the one thing that I do know is I don't know. I wish I knew, but I have learned in my life, especially since there's so many religions, for instance, we're talking about religions, so many religions that say they know perfectly the answer. Well, and I, traveling around the world, it came to my mind, well, wait a minute, they can't all be right. All these religions, they cannot be, even though every one of them insists that they are right. Well, I don't know. I don't know how that can be, but I certainly know that I do not know.
Well, I think honesty in your 5 value category, honesty to yourself and being yourself authentic is a huge key. The one last question we have from our analysts, I think it's a really good question, but I think I suspect the answer. The number one thing you know now at this moment, which you did not know when you started. Does anything come to mind?
Well, I'm going to answer your question not quite the way you ask it. I never wanted to have children, and I knew that children were a waste of time, money, energy, and everything else. I felt so sorry for all of my friends who had children. How could you ruin your life by having children? Well, Florian, I was wrong. I didn't have a child. My first child, I was 60 when I had my first child, and I will tell you, I was wrong about children. I have two now, and they are certainly one of the, if not the most wonderful thing I've ever done. So if there's anybody out there who hasn't done it, and you're old enough, I urge you to go and have children. Now, if I had had children when I was 20, it would have been a mistake, or 30 or 40. It would have been a mistake for the mother and for the children and for me, because there were other things I needed to do. But I would say that the biggest thing I have learned is I was wrong about children for many, many decades.
Jim, I love closing on that. They are our future. They're a part of us, and they're completely, in some ways, different from us. It's a joy to see them. So on that note, thank you for our call, for our talk. And I wish you all the best with your children, of course, and your wife. It's far more important than next month loose change in the bank account.
Well, Florian, it's been great after all these years. I hope we can do it. I hope we don't have to wait 5 years, 4 years next time.
We
a lot
won't,
of fun.
We won't, and obviously this will be translated. I recommend to all the viewers, we'll have some English viewers also, obviously. I'm going to link the books of Jim Rogers. They have inspired me. I'm always asked what books I like, and I mentioned Benjamin Graham, Jim, and Warren Buffett, and blah, blah, blah. Screw that. I love your travel books. They give me much more juice on investing, and they tell me, and they have a much higher fun factor, and there's some danger in them too, so adventure. So on that note, maybe we'll get to see each other one day and do a live video. How about that? Okay.
I would love to come to Frankfurt. I would love to be with you on Long Short Investment News, live in person. That would be fabulous. And then we can go down to the beer hall later and drink good German beer.
Okay, Jim. All the best, and thank you very much.
Thank you, Florian. Bye-bye.